Good morning, Tim. Welcome back for our live session about macro together with Tim. Welcome. Thank you, Tim.
Yeah, hello, Fabio. Hello, dear viewers or listeners. I hope you're doing well.
So before we start, Tim, let me just go through our disclaimer as always for a few seconds.
Yes.
So we can get started. So this week, we obviously had a big release. We have our new dashboard, our new models on futures, a lot of new things. And today, we're going to focus about macro, but then Tim is going to also show us kind of like his routine and how you can effectively use your MenthorQ data to obviously look at the market. We have a lot of different charts. We have a lot of different quantitative models, and then how you can set it up and look at data using the dashboard. So thank you, Tim, for this, and I'll pass it on to you.
Yes, right. But at first, we will start as always with our little presentation. I built a PDF, and as always, we are looking a little bit over the last week. We are going over the next week. It's a short week, so it's a short part of the demonstration today. But a lot of stuff is going on, and I try to cover it the best I could. So last week, as always, SPX chart on the left side, it's a little bit small and cramped because there's so much going on, like in the last 2 weeks and this week. It's really, really hard to pack all the stuff together. And if so much stuff is going on, I usually try to filter out all the noise and look at the most important stuff. And this is what I try to express with this over here. Last week in SPX, we are traded below the yearly open. If you are into, let's say, technical analysis, those levels are kind of important. It goes from like daily, weekly, monthly, and yearly opens. Has to do with settlement, who is in the trade, who is out, who might stops out. And it has also a little bit of psychological effect. I always call those levels psyop levels, because you are actively down over the year, right? If you bought SPX for the yearly beginning, and if you are a futures trader, the yearly open in futures ES. Oh, I have the chart later. We can talk later about it. All good. And what we are seeing, this is the right chart on the upper pane, value and low momentum stocks. I mean, they got hammered down as well, but not as big as growth, risk, tech, high beta stocks. If you are a viewer of those little updates here, I always watch the ARC ETF, which is the LILAC one, in the right upper chart, completely get hammered down. It was kind of interesting 2 weeks ago. We had huge put exposure shown in skew and risk reversals in the ARC ETF. So people were kind of aware, I think, that the last recent rally might come to an end. But I didn't catch it. I had so much stuff open, which we go over in the next slides. So I also added CTAs down here, beginning on the left-hand side with the NASDAQ, going over the 10-year futures, and then a little table on the right side. They are actively reducing their exposure, right? Out there are many CTA models. We're doing our own, but also Goldman Sachs tells us the same, or JPM tells us the same, and that CTAs, so systematic buying in futures, trend following up or down, isn't that very active on the long side. They are actively reducing or deleveraging their exposure in equities. It's a very different picture in futures. That's the reason why I added the 10-year future CTA exposure in the middle. Pretty big rate of change. If you look at the table on the right side, 10-year T-note, that's what we are watching 1 month ago. CTAs have on crowded shorts, let's say it like that. I know it is not that easy to say because in treasury markets you always have basis trades on, which means you're a hedge fund, you are buying the 10-year note physical because it has a high yield and pays you, but you have to hedge this with futures. So this is represented in CTAs as well. It's a little bit a part of it, and it's also showing in those numbers here, which from 1 month ago was minus 2.24%. Nevertheless, the rate of change is quite significant to this day and helped a little bit for this recent rally in treasury futures. What's also have to be considered over there is the recent, let's say it, risk on move in equities. I mean, the ES alone from the 20th of February is down like 6%. It's a small correction, but active money, active trading, fast money, they are searching for other assets then. And one of them are the bonds, and helped this little recent bond rally. And to put all this together, like one of the first presentations from me, because we started in January, was always the term of uncertain development in markets. Someone built it a meme with Donald Trump and the Wojcik guy. I put it in the middle over here. It kind of fits because all the tariff chaos, it's like everyone I know and everyone I talked with, and there are people in my community, they doing this stuff like for 20 years or 15 years, some of them professional, even to this day, and they say it's very chaotic. No one really knows the outcome of all this stuff. So don't be surprised. Markets can tank a little bit on this, also given the tremendous rally. And this led us to the fact that if I'm looking at my ES chart here on the right, as of now, we are trading at the levels from the election day. So Trump bullish for stocks, we don't know, have to see. Next one, the week ahead. I mean, it's a half week, but 2 important numbers. Today, 10 a.m. EST, the ISM Service PMI. We all know the US heavy skewed to the service industry. It's around 78% of GDP. It's a big number, should be watched. The question I have here is, if those numbers are coming better, will this really change the tone of the market? Right? We have seen selling. We have seen multiple days where equity futures were down beyond 1-day standard deviations. VIX is up. And I don't think it's a number that will change much on the upside. So if you are a day trader and you're in the markets today, maybe wait until 10 p.m. see the reaction. I think sell the rip is a good idea, but know it wise. Friday, NFP, of course. Yesterday, I have read a paper from, is it Anna Wong? She's a pretty good analyst from Bloomberg, and she nailed like the last 3 or 4 NFP numbers pretty to the point, like 5,000 in dispersion over there, so not that really much. And she said the number should come in significantly lower, right? So that's the reason in red I wrote over there, are we prepared for it? Think of the market as you have insurance hedges on. Worst case for those insurance hedges would be you get so much momentum out of NFP numbers, you don't need that much insurance. You don't need that much hedges anymore. They may get dumped. if spot prices are moving significantly higher, also the market making process behind it can cause quite a significant squeeze. But in the end, we will know tomorrow at 8:30 in the morning, and also tomorrow 12:30 p.m. EST. Jerome Powell is speaking, right? It will be watched because it's a long time ago he made a speech like that, and what I have been told from someone who is really familiar with the situation, they kind of want to know from the Fed and also from the FOMC what they say to the recent developments in tariffs and with Donald Trump. I know they always say monetary policy and politics is kind of divided, does not go together, but we all know it do kind of. So yeah, could bring some volatility on Friday as well. Why is it like that? Last week, CBOE research paper, they do it like quarterly, heavy options skewed, and the SPX 0DTE volume in February makes out 56% already. That's pretty high. That's sometimes the reason you have those extended moves into the markets. If you are options trader, and if you have like watched the last few days in the close, if you have like on Friday those massive passive buying flows that we had from end over months, where we had a MOC imbalance from like 9 billion, which is pretty high in SPX. Those 0DTE contracts, if they are chosen wisely in kind of strike, they gain so much in money and value, they become even more popular, right? And that's a trend that is ongoing. And it's also a little bit of the reason why we are doing this stuff here, right? Why we are talking about options and why we are trying to bring this service to you. And for the next 2 days, things to note, will the growth scare in markets will materialize? Obviously, NFP is a number where the market will gauge this a little bit. The sector outperformance stuff I have showed you on the first slide. IBM, like yesterday, Donald Trump made an announcement that he was aware of the big down move in small cap financials. It has to do with Canadian re-tariffing the US, and he has advised Mr. Lutnick to go into this a little bit. So will we see kind of relief, what's going on in tariffs, and how do markets react to eco data? I have mentioned it with the ISM example for today. I'm not really sure that this tier 2 data matters that much today. What's in favor on a daily basis? The bond move, we have spoken about it on the first chart already. And what's mandatory these days? Check those positions daily. It can change on a dime with all the fuss is going on. And yesterday I watched a little bit from President Trump's speech in front of the Congress. And my favorite quote out of this was more economic discomfort in economy possible, whatever the fuck that means. But take it as a hint. Maybe there's something bigger going on. We don't know. We just react to our data and what we can do or not. Little recap from the 19th of February. I tried to, told you what's going on the other side of the pond. If you are watching from the US, I labeled it as Europe is changing like 3 weeks ago. And with the recent developments, last week, I just say Trump, Zelensky, White House, war, blah, 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 and what's going on in Europe and how they will react to it. I have pitched you the idea that it's maybe a good thing to invest in EU defense stocks. And on the other side, if you want to have an exposure that makes sense in terms of macroeconomic trading, you can also sell European bond futures against it. And what can we say? It worked out pretty good. But unfortunately, the chart is so small for me here. I have to look over here. Yeah, a few defense stocks out of the UA from the 19th of February. In Germany, Rheinmetall up 25%. We can go over to Italy, Leonardo up 25%. Avio 17%. We can go to Sweden with Saab up 20%. We can go to the UK, BAE Systems, they are up 19%. Babcock International 10% up. Defense stocks, right? More increase in the UAE, in defense and spending. You can do your research or ask me if you know me, I don't know. And structuring a trade over there isn't that really hard. On the other hand, the bond sector, this is the FGBL, FGBX. Those are bond futures 10 and 20 years from the US. They tanked a lot this week, like over 6%. Why is it like that? We have talked about it 3 weeks ago. All the spending, all this chatter about debt ceiling, all the stuff, this money has to come from somewhere, right? It does not grow on trees. So it's likely it will come out from the bond market, which means debt creation in the EU, more issuance in those markets, means more supply, means prices are going down, bond yields up. Yeah, that was kind of the idea worked out. What I did, I bought Saab, Leonardo, and how is it in France, Dassault Aviation, because Rheinmetall and Renk, I couldn't buy them, and I already had like Rheinmetall shares like 2023, like 1 year after the war, so I had already exposure over there. And for the bond futures, I just had puts in the X futures via Tastyworks. That was my expression to show this a little bit. It's connected, of course, and yeah, turned out pretty well. But let's go over to the US, our most favorite market. Starting with a big picture, but it's really interesting actually. ES futures here on the left, we are trading below, that's the red line, 200 DMA, the yellow line, which is the 100 DMA, and the green line, which is the 50 DMA. So it's fair to say we are in a small correction territory. I also mentioned the fact that we are erased the so-called Trump bid in futures or stock markets in general, which was ignited by the election day. It was 5th November last year, I guess. Yeah. This down move had brought in significantly momentum into volatility, of course. So VIX yesterday peaked around 26. Yeah, Tuesday, 26, right? Interesting skew down below here. Shows a little bit of a put bias. It looks like 25 might be short-term ceiling. The thing behind this was, I think we had it like 2 weeks ago. We have spoken about VIX already, that into the complex there's already buying and customers are long Vega, which is volatility in VIX. So you have upside exposure in this. And if there is realized volatility mapping kind of with implied volatility, VIX can move significantly higher. There was a great research paper from Nomura I had, which told us there's easily a 10-point handle baked in VIX. And VIX was around 15. Now it's the 25 area. I don't have exposure over here. I missed it, to be honest. And trading volatility is always a thing. That's the reason I have this little sentence on the right side. You have to have a waterproof framework on it, looking at different metrics. And as you can see with the net expiration GEX chart on the right side, there's still upside exposure, of course. People are wearing those hedges already. The VIX future curves are inverted a little bit, like Monday. Yeah, Monday into the close. And the front month compared to the next month in VIX futures, is trading positive right now. 32 basis points. It's not dramatically, but it shows you there's actually a pretty high demand in VIX futures. That's mostly due to hedging in the market making space, because those VIX options in the book of a market maker, they logically bring their exposure a little bit up, so they have to buy those VIX futures. And what you have to watch now is always how is the spot market reacting to volatility. If the spot market goes down significantly, VIX has to move as well. And also, if the spot market is green, and if the spot market is red and the VIX is green, those are movements where I would rather wait to short volatility, right? It's a little bit too early, but those are movements should be watched. And if you're a customer from us, of course, you can also watch the skews, how positioning will be changed. But a lot damage has already done on the downside. And for volatility, I mentioned it, the correlation between spot prices, that's mandatory to watch these days. So we are coming nearly to the end of the PDFs. We're going a little bit to the FX space right now. First of all, the XY index over here, significantly down already this week. All the tariff stuff in the US has brought in a little bit of a chaotic movement. So those crowded dollar longs that we had the 2 years are starting to bleed out a little bit. Of course, always currencies are traded against each other currencies, right? Like the euro US dollar or the euro yen. And they are outperforming significantly this week. It has to do with the story which we had 2 slides ago from the government spending, defense spending in the EU. If the EU government bonds are going down, yields going up, usually FX spot prices are following, pushing even more pressure on the dollar. And if you are long enough into the market to remember the first term of Donald Trump, a strong dollar was never in his favor, right? So maybe history repeats. I don't know. A lot of it is different from the first term, but the dollar weakness seems to be, follow this playbook. And what's interesting, usually dollar weakness sometimes is labeled as bullish for stocks. And guess what? It's not like this time. So let me set up TradingView real quick. We need 6E futures. I have it over here, right? So, and now we are going briefly over to the new dashboard, which Fabio showed you here already. And I have to open it as well, of course. So, right, that's the new dashboard. Okay. If you missed it, it was released like 2 days ago, Fabio, right? And I always have my stuff pretty organized. It's now like in TradingView on the right side here with the watch list, which is pretty cool. And there's some new data in it, of course, for futures. Pretty much all the stuff you need. And let's imagine you want to be trading FX this week because you have read some of my research and you think the euro will trading higher compared to the dollar, because we are trading futures, and the 6E and all the other FX futures are always paired against the dollar. And yeah, you kind of know the story I have told you. And now we are going a little bit into the technical stuff and trying to find out what's going on and how I would structure it. So let's imagine yesterday, that's the reason why we have the 4th of March over here. There's a little calendar where you can change this. Down here, trading view levels. And here, I have to prepare this stuff just a little bit quick here. So what I always do, looking at the market, as a whole thing in terms of net gags for all expirations. So this shows you the 6E and what's baked in for all options trading into this. And just by eyeballing how the exposure is over here, you can see those areas, 0.5, 0.55. Something has to happen over there, right? So let's assume we have this long trend because the recent developments in the EU and the dollar weakness is favoring a long trend. And we want to check out positions. So now, of course, you cannot say all those people here creating positive gamma are long. It's kind of requires a more digging into the options chain. But in futures, I made the experience. It's already an advantage if you have like 2, 3, maybe in equity futures 4 or 5 levels, which showing actually interest. Something has to happen over there, right? So this looks a little bit thin because those 4 charts are showing the next 4 expirations. So this over here is actually from today, right? And in FX futures, it's kind of thin. You can't compare it that much to equity futures where a lot is going on with options. It's due to the reason options in FX, they have the permission to be alive or be traded in this market. And they also serve as some sort of, a hedge, sometimes also a directional bet, but not in the amounts like in other assets, right? So keep in mind in FX, a lot has to do with swaps and all the stuff. We can't track this. So let's go look into it a little bit deeper. And what's already obvious on the right side of this chart here, there's also the same area of our 0.105. It's also shown on the left-hand side down here. So for yesterday, if we would have looked yesterday in it, we already know this is maybe an area where something could happen, right? Going over the options matrix again, we can see DEX is positive. It's pretty healthy, right? You have like those days red here. It does not mean the FX future goes down. It just means more volatility. Let's keep it to this. But overall, we can see, okay, it looks kind of positive. Then it shows you also the key levels, but we will discuss this in the chart. And I have to switch my window. Just give me 2 seconds here.
Yeah, and just while you do that, Tim, just to remind everyone, so everything that Tim is showing you is available via the dashboard. So we do have promo going on right now. So if you guys join us, you can join our premium or pro plan. Today we're going to be live trading with Patrick at 10 a.m. Eastern. So stay tuned there. It's going to be available on YouTube and X. So that's going to show you kind of like our process, what we do within the group. And then, of course, if you join today, you can also benefit from our bonus here of joining 2 live trading sessions next week. I'll pass it back to you, Tim. And
yes. All right. So yesterday, 6E future March contract. Always the reminder from me, check out which contract is the most liquid, especially in FX futures. It's the March one. We are going into it, and we already have done our MenthorQ levels into the chart, and we have spoken about the level from 1.05. This thing here in the red is the whole session that you have traded on this. And if we are looking right over here, this is the only significant pullback that you have gotten during this day, right? And if you look at the timestamp, it's 10:30, which means for us, there was actually, selling due to the open, which is for FX futures 8 in the morning. It was the daily high. But also during 9:30, where also a little bit of volume comes in. I don't know why. Maybe people think 9:30 is also a good time to trade FX, but it's 8 EST, usually the open. After a little bit selling move into this area that we already mapped out with our GEX levels, right? So what's the trade here? If you are doing a little bit of TA and technical stuff on top of it, I don't do it, so I don't have it here in my chart. I watch other stuff, which I will explain a little bit later. But just look at the volumes down here, right? All the selling move from up here down to this has shown a fair share of volume, right? But in this area over here, which is GEX 1, there's actually a big chunk of volume, right? And if you are a believer in the so-called volume analysis, which you should check if you are new to it, you can see those 5-minute candle over here shows a big wick alongside with big green volume. That's so-called stopping volume. Someone is in there, aggressive market sellings or buying into passive buyers, creating a ceiling, which is like magic around the 1.05 area, right? It does not tag this level exactly to the tick, okay? But that's not a problem because with the levels, you have your areas where you can be active, right? And even if you think, what is this? GEX 3, right? We broke to the GEX 3 level over here. And even if you are not much into the option space and you think, wow, that's the level I should buy, Chester told me, you will may get stopped out, but you have a second chance down here. But you are well educated and you know your stuff from the options market. You also know GEX 3 means, in the language of MenthorQ, it's not the highest GEX level, right? GEX 1 is the highest. It was GEX 0 a year ago, but yeah, it's now GEX 1. And that's the reason why I, in my charts, have just those 3 levels out of GEX. The other ones you can see here, like a core resistance, gamma walls, and the HVLs. That's even more option stuff. But I mean, you will learn it if you're interested in it. But from our little preview that we had, we already mapped out this area here, which we tagged 1030, right? And then we went up. We went up beyond the one-day max move. So the first standard deviation of the day was already broken around 1:15 p.m. EST, and we are going big higher. This means for you, there's actually big momentum and big trading, because people over here are really cool to buy beyond these one-day standard move. So the standard deviation move is always mathematical, right? And for what is a good example to explain for bonds? If a 30-year bond future ZB moves beyond those one-day min or one-day max levels, that's actually a big thing, because it's an asset that rarely moves beyond those standard deviations. Equities can do it really easily, right? Because they move order, they have order better, they have more volatility baked in. And for FX, it's also a pretty big thing, right? The 6E is already up today 0.83%, and it's not even 9 in the morning, right? I mean, you have Asia they are buying, you have London they are buying, but the FX buyers in the US are already on their desk since half an hour, and there is no big down move, right? So they are okay with higher prices. If a price trade is beyond one-day max and there still follow through, it's just momentum. And yeah, there is a question from Samba. What are the bottom two lines? That's how I trade. The two bottom lines, man, I hate those colors. I even know how they call it in English. I guess it's magenta, but let's make it yellow. It's more easy. On the right side. So hear me out. Trading FX futures, I wrote a primer like a few months ago into the Discord, and it's basically the same what I've did over there. The lilac line over there is the so-called yield differential, right? FX futures, FX, whatever spot options, they tend to move with the yield from the underlying government bond, right? And if you build a spread out of this, is the lilac one down here, which is basically the Euro 2-year yield versus the US 2-year yield. So you're comparing the yield from the government bonds, how the spread is it pretty near or is it pretty wide? If the spread is pretty wide, like here, the asset you are trading, the 6E, tends to move higher because FX usually follows yield. I mean, just look at bond yields this week, how they are, where they are, and look at the dollar, where it is, right? This correlation is not like one all the time. It can vanish a little bit, but usually it's a good indication. And the yellow line down here is in there because I told you like 4 or 3 slides ago about the bond futures in the EU, right? If they are going down, it usually means the euro goes up a little bit. And yeah, but today is the 5th, not the 4th, so let's go over a little bit. Pretty easy change. Now we are doing exactly the same, looking over net gags, and we can see, okay, we are trading thick in areas here where is pretty big exposure, a little bit below like 1.525. But nothing big has changed, right? The momentum is going on. Gamma conditions are positive. Implied vol is a little bit higher, 11.4.5. That's normal. That's good. If you have momentum to the downside, implied vol has to follow a little bit. It would be more concerning if you have a big up move and implied vol isn't that high, right? Has to match each other. And for today, it looks like this. So let's keep more color in it. So those are the levels from today, right? I have added a little bit of a volume profile over here because we can actually prove our thesis from the GEX1 level from yesterday, which is still the same, right? Volume profile wise, look at this big chunks here that have been traded. Actually, pretty significant if you compare it to today. I mean, this chunk here was built out yesterday already. It is 8:30, so in today it's not even that big. So what does it mean? This level was really important, right? We mapped this out with our MenthorQ stuff that we have. We have seen confirmation, and we can also say from the volume that has been traded over here that those VIX down here from yesterday, 10:20, 10:25 a.m., they got bought pretty significantly, right? So for today, it's the same thing. Do I have a marker? Yes. We are already trading above the 1D max. You can see over here, it's really interesting, right? I mean, it was 6 in the morning. I don't know if you guys want to trade 6 in the morning FX futures. Me not. I would wait. But it get already bought, right? It's some kind of the lower edge from the volume profile over here. And it shows you that this stuff, even if they are just mathematical born, not necessarily due to options, they are important and they get watched pretty extensively. So if you are in the trade, I would hold it. If you want to trade it today, there's a little bit of a problem, right? What's above? Nothing, right? And don't trade if you don't have it, take profit. So what we can do now, is it today? Yes. We can go back to this chart and just have a look by eyeballing how it looks over here, right? So I forgot the number. We are trading at 1.07. 1.07. Wait. 1.07. It's roughly this area, which means this exposure here is already being traded, right? Same here, the upside is missing a little bit. What we can now do is hope or waiting for a little bit of a pullback. The only problem is you already had this in the area of the 1-day max. So this is at least a pullback I want to see, right? And let's put in a little bit of a risk reversal. Let's say the thesis behind this, we want to trade from the 1-day max up to daily high, but FX love those numbers. So let's say into the 75s. I usually use 20 ticks. That's just out of the blue, right? That's just brainstorming right now. Something like that I want to see. what I never do is just place a limit, right? And hope it's going well. I, of course, will observe this a little bit. This is then why I have those confirmations in my charts, right? The yield differentials, volume, of course, and yeah, volume profile just by eyeballing what happens over here. And what is a little bit interesting over here, GEX 1, remember, right? It's the second biggest GEX level. This would be a really cool entry. So I would rather aiming to this, right? If you want to play it conservatively, nice round turn to the highs. Would be an idea. Trade from GEX 2 to the 1D max already, right? So this is stuff I watch daily. I then set my alarms a little bit over here, a little bit over here, and then it's just, yeah, a waiting game, just trading always. And yeah, this is basically how I kind of connect if something is going on in the market, right? I mean, we have mentioned the 6E performance, why it is trending, and then it's always mapping the technical stuff against it. It's a little bit different from asset to asset. If you guys want to see other assets, just let me know. We have a little bit of time already, 14 minutes. So, but this is the story for FX and how I would probably do it. And on the other hand, because those trades would rather trade like 2 or 3 days, not just intraday, I then do always the same in the next morning, right? Look how the levels have evolved. Okay, the GEX1 level has pulled a little bit upwards. Also, the core resistances, like obviously this level is a huge one over here. So I want to see a shift up and dip a little bit with the trend, right? Now I have the drink.
And maybe Tim, like what would be interesting if we go back to our dashboard? So we released a new model for futures. So for those who are trading futures, we released our futures curve this week. So maybe like sharing some insights on kind of like how you would look at it and how you would interpret it and use it for your trading in future.
Mm-hmm.
Maybe let me just share my screen. I'll just show how to get it. I'll just share my screen. All right. So within your dashboard, you have a futures section right here. So within the futures section, you can kind of customize the layout of each of these modules, and you can add basically your widgets right here. So you have all these options. I already added the futures curve, and we can see it all the way down here. So I can move it up. And if we go, for example, to our crude oil, for example, we can see our futures curve right here. So what we see is the current curve, and then what we see is the historical one. So 1 month ago, the curve was up here. The red one is 5 days ago, and this one is yesterday.
Yeah. Usually for those stuff, I always used other tools. So it's cool we have it now in one place, because it's always really, really annoying to have like 20 websites or like 2 workspaces to have all the stuff together. Basically, what we are seeing here in CL is a good example. The futures curve always represents the price from the different contracts, right? So if you are looking from the left to the right, it starts on the left side with the actual contract that's trading in futures, in CL, it's like CLJ, which is the March one, and it's the highest price, as you can see, right? So yesterday settlement, the green one was like 69-ish, and the further out you go, you can see it expiration state on the downside, the further down goes the price, right? That's backwardation, which means right now oil is more expensive than, what's wrong with my damn camera here, sorry. So right now oil prices are higher than they are in the future. Normally for commodities, it's tilted to the other side, right? Because usually in CL, HG, aluminum, whatever, soybeans, the demand in the future is higher because people tend to consume more. In CL, it's like last year. I think last year in February, it flipped in backwardation. So the main takeaway, if this looks like today, like backwardation, is there's more volatility into the front month, right? Because now, if you have like 5 millions of oil barrels into your inventory and you have to hedge it, you might sell it in 100 days, 3 months for $67, right? Because the curve is tilted downwards and you would lose money, okay? We don't want to lose money. So we trade the front contract to upset this loss. That's the process behind. Really simple, right? Futures curves is basically just storage cost. And maybe delivery costs, yeah, not maybe, because every commodity has to be delivered. So it's just cost hedging, right? Of course, you have also the speculators like us. We are trading this stuff along with the big boys, but usually the bigger people in those markets are just hedging out storage and delivery costs. So,
And
yeah, Fabio?
no, the other way that you can trade is with spreads or time spreads, they're called. So where you could potentially like bet on the change of the curve. So if you think that, for example, the oil curve will revert from backwardation to contango because there's an event coming, then you could basically trade those spreads, benefiting from the change in the curve.
Yes, that's a thing I want to point out a little bit later, because as you said, we have here today, yesterday, 5 day, 1 month ago, and those spreads are changing, right? So the green curve might be a little bit closer to the red dotted line or to the yellow dotted line. And this is, yeah, what Fabio called a spread or calendar trade in futures. It's pretty advanced and you have to do the maths behind it, but
Yep.
there are several ways to trade it actually. And with the help of this, you can, which is pretty cool, even by eyeballing, okay, the spread like 5 days ago to the actual month was way, way bigger than just 2 days ago and was huge compared to 1 month ago, right? So if you would have listened to my stuff in January, where we have spoken about the recent oil price development, and we said, man, this looks mechanical, right? This pretty big pump that doesn't make sense. It's not backed by any underlying stuff that's going on in oil futures. This would be your trade shorting down the curve, right? It should be also expressible with options, right? Because you have options for March and June, December contracts. But yeah, of course, with futures, I do this stuff sometimes with bonds, but other story. But yeah, future price curve in CL, it's mandatory to watch from my side, to be honest.
That's awesome. All right. We have 5 minutes left. Let's hear if we have any question, guys. Let us know. And thank you, team, as always. Amazing.
Yeah.
Yeah, let us know if you have questions on the new stuff or what Tim went over. And
did we miss something? Bottom two lines we have directional price. Can you please explain the importance of two lines in the GEX plot? I'm not sure what you're meaning, Samba, but those GEX lines are labeled with 1, 2, 3, 5, 6, blah blah, however the much you want to have in your chart. They are always labeled how much how much exposure they have, how big they are, how relevant they are. I mean, it changes from time to time. If you're plotting a GEX 1 level into the SPX chart like 1 month ago, it's a different one than today, right? Because GEX in markets is not always that high or that low. It's always relative. But from my side, I just watch free all the time across all the assets, because I like to wait for my entry and wait until it makes sense and then fire up the trade. That's the reason behind it.
Yeah, all of that is explained within our guide section. So if you come, I just posted the link in there as well on the comment. Just come to our guides and we explain what gamma levels, jacks 1 to 10. So you have everything here. Everything you need is available there.
Exactly.
All right. So thank you, Tim. Thank you, everyone. Thank you for watching. As always, please check out our promo for this until March 16 is going to be available. And then later, in about an hour, we're going to be live again with some live trading with Patrick. So don't miss that. It will be a good one. And see you guys very soon.
All right. Then have a great day. Don't
Thank
do
you, Tim.
stupid stuff. And see you all. Bye, Fabio.